Listen up or run for cover. Dropping knowledge from the people who have it to the people who need it. The real Bradley is dropping
What it is, Brad Lee back again with another episode of Dropping Bombs. Today in the studio, folks, I got a real treat for you. You may have heard of him. He's known as the Apartment Rockstar, but his real name, Robert Martinez. Welcome, bro.
Hey, man. Thanks for having me on the show.
Dude, I've always wanted to ask you this question. Rockstar Capital. Yeah. That's technically your company name.
That's right.
Why Rockstar?
So back in the day, I've been involved in real estate since 2007. I had another company with another partner, and I got up to about 2,000 units. I was the operating arm of that business. And anytime I would talk to somebody and give them, like an attaboy, I'd call him a rock star. And true story, he and I had a falling out. He tried to cut my throat. And when I
literally,
he pretty much he changed the arrangement of our deal.
Familiar with that?
Yeah. Happened to me during Christmas. My family was over at his house delivering cookies, and he's on the way to San Antonio somewhere, and he's changing the deal on me. And I was really, really disappointed. I've gone through a lot of therapy to get through it, right? But it left a mark. And so I was like, I realized I'm not going to be here. I can't work with somebody that I don't trust. And doesn't have integrity. And so when I started my company, I'm going to call it Rockstar because that's what we did. We had Rockstar results. We had those attaboys. We turned money after money during the recession, which is when my career got started. I was able to do 3 100% tax-free refinance events. That means we bought a deal during the recession and then refinanced it and pulled all the investor equity out. And so the name was very apropos. And so when I started the company, I said, we're going to call ourselves Rockstar Capital.
It's a cool name. It's almost like, that's like the perfect name. Yeah. Rockstar Capital. Now, let's go back before you did all this, before you were the Apartment Rockstar, before Rockstar Capital. Who were you? Where were you? Man,
I'm just a kid from South Texas, man. My mom and my dad, middle class. Neither one of them went to college. My dad worked in the fast food industry for 40 years. My mother worked at Hager's and Levi's before those plants moved to Mexico. And so they're my first mentors. And they said, go to school and get good grades. And that's what I did. I had good grades in school. I went to Texas A&M University. I got an engineering degree. I went to work in the oil and gas market. And I went into sales because that's the best way to get ahead in life is sales.
That's right.
It's 100% right. The guys that make the most money in the world are the sales guys, not the guys that sit in the cubicles.
That's right.
The sales guys. And so I realized that. But what happens is corporate America starts to get into your life, and companies get bought and sold. New management comes in. They want to make a name for themselves. They want to show some growth, and they want to cut. And so what they do is they like to see who's making the most money. And sales guys normally get cut. They play with their commission plans. They rearrange their territory. They change the compensation, And I'm the kind of guy, I'm going to kill what I'm going to eat tonight. And when you start to play with my commission plan, you monkey with my commission plan, it takes all the incentive out for me. And after that happened for the third time, I realized, hey, I got to change the game up. I would listen to business radio a lot. I was in my early 30s. I stumbled upon a real estate education show. I thought it was an interesting idea. I'm going to go to it. I attended that weekend. I thought I was going to be the single family king. I thought I was going to learn how to buy rent houses. And I went there to the the 2-day boot camp on Saturday. And I came home like, yeah, I'm going to do this. And then Sunday came around and it was about apartments, multifamily investing. And that's when I learned the magic formula. That's when I learned that $1 of NOI in the apartment world equals $17 of valuation, and how you can just really increase the valuation of your net worth, which would eventually change my family tree, because that's something my mom and dad didn't teach me, but I learned in this real estate class, this real estate company that I paid $10,000 to learn this, and it's been a game changer since.
So you had $10,000 to learn it, though.
Yeah, you got to pay to play, man. There is nothing free in life. You've got to go out there and you got to figure out who is where you want to be and learn from them. And typically they're not going to do it for free. You got to pay to play. They're there to show you the roadmap, show you what road not to take, show you what curve not to worry about, what bumps to avoid, and you accelerate, and that's what you pay for.
Would you say that class kicked it all off, but you've learned more since?
I learned a lot since. That was introduced to me. It introduced me the concept of apartment investing.
As opposed to single family?
As opposed to single family. Yeah, single family, because, in single family, you can do a great renovation. You can add granite countertops. You can add, the best cabinets. You can make the kitchen look incredible. But you're still only going to be in the same valuation of that submarket. In the apartment world, if you understand it's all about the NOI, you are not based against your submarket. You're based against everybody, so you can increase that valuation. So a $10 rent bump on a 100-unit apartment complex creates $200,000 of valuation. Did you know that, Brad?
No.
But what happens if
I'm just getting into it.
Yeah. But if you go $10 on a single family house on your rent house, did you increase the valuation? No, you just made another $10.
When you say like a $10 rent bump,
yeah.
So it was $900. You say rent's now $910.
Yeah. $10. You make $10 more. You created $200,000 of valuation.
So anytime somebody buys a apartment complex, do they raise the rent?
They should. I mean, typically, what you want to do, you want to buy a deal that has some upside, either through mismanagement or a lot of deferred maintenance. Typically, we try to get both. So what we're going to do is we're going to do a renovation. We're going to find the right deal in the right area. We're going to do a deep dive of the market itself and figure out where the competitors are. Are we the low? Are we the medium? Are we the high? And we go for the high player. Why are they the high? What is it that they're bringing to the table that no one else is? So we're going to do a renovation plan. We're going to buy the apartment complex. We're going to put brand new air conditions. You know why I put brand new air conditions?
Why?
100%. Because the number one reason why people move out of apartments is maintenance. And the number one maintenance headache is air conditions. I live in Houston, Texas. You're in Vegas.
Yeah.
It's hot.
Yeah.
You don't want to come home and it'd be 82 degrees in your apartment.
I'll move.
You'll move.
Quickly.
You'll move right away. And we don't want that. We want
that and shitty toilets.
Hey, that's another one. I'm glad you said that because we do a big water conservation. But we would change out all the air conditions day one. That is a basic,
regardless if they need it or not.
If it's under 5 years, we're going to keep it because there's still a warranty, there's still a shelf life. But typically, we buy from owners that don't put any money into them. We put some money into them. We get that valuation. We get the efficiency. We get the reliability because I focus on basic services. I don't need to have a hot yoga room. I don't need to have a world-class swimming pool. I need to have basic services: hot water, consistent water, and cold air. And I focus on those three things because the name of the game in the apartment world is the renewal. It costs me $3,000 minimum when somebody moves out of an apartment. I got marketing costs, I got commissions I got to pay for my leasing agents, I got the rent ready expenses, the paints, the carpet, what have you. But when somebody stays, I save $3,000. But I don't just say $3,000. $3,000 on the NOI divided by 6 cap is $50,000. So every time somebody renews, we make $50,000 of valuation. That's before a rent increase.
When you say evaluation, if you don't sell, what's that? How does that help?
Yeah, because I don't want to sell. I want to hold these for like 10 years. I want to increase the valuation. Then I want to go back to the lender and say, hey, I want you to value my property now. They're like, wow, you've kicked up the NOI. And the NOI for everybody listening is the rent minus the expenses equals the NOI. That's the net operating income. If I've been doing a good job for the last few years, I'm going to increase that rent because I have demand.
Well, why can't you just increase it anyway?
You can, and that's how you make your money in the apartments, right? But people still have to stay. You got to take care of them.
I know, but who moves?
Believe it or not, people move. I mean,
because if I could
turnover
think back when I stayed in apartments, because I used to that's how you start, right?
Yeah.
If somebody just came and bought, first of all, I didn't know who owned the apartments anyway.
Right. That's right.
I'm just paying rent. Let's say my rent's $1,000, and they say, hey, your rent's going to $1,100. I'd be like, son of a bitch, but I wouldn't move over $100.
The national average for turnover is 65% turnover. People move
for $100 bill. How much does it cost to move?
But for any reason. Well, people don't necessarily think.
No, I'd move for a broken air conditioner. Yeah. I'd move for major issues like there's bugs, there's beehives. You guys ain't taking care of this place. Yeah. But I'll move because I don't want to be here anymore. Yeah. I'm not gonna. If I like the place, it's got cold air. Everything's nice. Yeah. I'm not moving over $100.
Yeah, but you have to understand that everybody, and we buy working class apartment complexes. So $1,000, if you increase it $100, that's a 10% increase. Did their job go by 10%?
Do you think people will move?
Yeah.
Have you tried it?
Yeah, I have. So
it doesn't work.
We're looking anywhere from a 4 to 5% rent increase. If we can get 4 to 5%, we are happy. But better than the rent increase, if I can keep them there, I don't spend any money.
Yeah, I like that. I like that perspective.
Yeah. And so we've gotten very good. We've gotten very good at reputation management. When I first got in the business and I saw a negative review, I got scared of that. I hated it. I would put my head was in the sand like an ostrich because I was afraid of what I found online. And then one day I woke up and was like, you know what? That's stupid. Because when somebody moves in, aren't they happy? So why aren't I asking for a review? When somebody renews, aren't they happy? Right? They are. They're renewing. They're paying a rent increase. Why aren't they getting reviews? So I don't say, you know what? I'm not going to let the haters who are putting a negative review there because they got towed for parking in a fire lane or in a handicapped spot, or they don't want to pay their rent and they're pissed and they're putting a negative review to try to hurt you. I'm going to drown out the noise, and I'm going to push as many positive stories as I can from the people that live there. And when we've done that, people buy from other people. They see that, right? When you go to Best Buy, do you know what TV to buy? Do you know whatever you want to buy? No, you ask the sales guy. He tells you what to buy. Well, when people are doing their research for apartments, they're looking online right now and they're seeing the review. So if you got a good Google rating, you have a good apartmentratings.com rating, a good Facebook rating, they're like, I want to live there. So it creates a little circle of life for us. Like, hey, if you take care of your existing renters and they don't move out, you make money. They're putting positive reviews. They're attracting new renters, which now you can increase the market rent because now I have demand because nobody wants to move out. So I'm creating this wonderful little circle, and that's how we make money. In fact, I've been able to do that so well that I've returned my investment. I bought a deal, refinanced that. That was your initial question. Bought a deal, improved the operations, increased the NOI, refinanced it in 3 to 4 years, and pulled out the majority, if not 100% of the money back. I gave it back to you. What do you think you do? You give it right back to me. We buy another apartment complex. I've done that 13 times. 13 times since 2011.
So how did you learn all this other than that class? Like you didn't just leave the class and buy apartments.
Yeah, that's exactly what I did. In the education class I was in, they took taking other people's money very serious. They said, if you're going to take money from somebody, then this has to be your number one job.
So did you raise money?
Yeah. So what I did was I walked away from my day job. I was making about $1.50 as a sales guy at the time. This is 2006, 2007. And I went and I sat in that leasing chair, compensated myself $36,000 because that's all that the apartment was making on that first deal, and I learned the business. I learned how to lease. Look, I'm leasing to guys with PhDs. I'm selling engineered products. Sales is sales, right? Certainly, so I can sit here and I can talk. I can ask the right question. We can go through the whole value proposition, and I can understand what they need. I can ask them where they came from. I can tailor my story, and I can lease the apartment complex. I can also hear them, though, right? So I'm understanding what's bothering them. I learned how to collect, how to knock on doors and ask for your money. I got lied to. You got to get lied to in life.
You ever got beat up?
I didn't get beat up. I did drive a golf cart once and somebody fell out because I was going too fast, but I did not personally get beat up. I don't buy those kind of deals. I try to avoid those kind of deals where there's a risk of getting beat up. But I learned the process is my point to that. So I've really had every single job along the way. And so with that, I've gotten pretty good at it. And, because I lived it. I live and breathe this stuff every single day. I'm thinking, how can I add value for my investors? How can we scale our business? How can we do it? Being on this podcast is another way. I got to promote. I got to brand. This kind of energy I've brought to my apartments. We have some of the best online satisfaction scores in the country, but it's my failure if you don't know that. It's my failure if the prospect doesn't know how good we are. So I've learned that branding. I've learned that marketing that I visited with other gurus who I think are just on top of the mountain. I need to learn from them. I've brought that to the apartment world, and yeah, I'm the Apartment Rockstar.
So how much is your average ROI?
So our average ROI is that what we try to tell our investors is that annually we're going to do 6 to 8% cash flow. And because of our depreciation and our ability, that's going to be net. You're not going to pay taxes on that. In a 3 to 4 year period, I'm going to do a tax out refinance event where I'm going to return you the lion's share of the cash, anywhere from 75%, maybe upwards to 100%. But on a 7 to 10 year hold period, we're going to do a 3x return, a 3x multiple on your investment.
And 7 to 10. So if I gave you $1 million today, 10 years, you'd give me back.
I'd give you back no less than 3x of that.
$3 million.
$3 million, no less. And you would have had the depreciation and all of the savings. You and I were talking offline, right? I asked you, did you get a stimulus check? You said, hell no, I didn't get no stimulus check. I make too much. And I said, well, what would you think if I told you that I got one? You're like, how in the hell did you get one? Because I'm an apartment investor. I got one taking advantage of the same laws that our president takes advantage of. It pays to be a real estate investor. It does. And especially if you invest in the right states.
Only if you know, though. If you don't know, like you're a real estate investor and you don't know, you wouldn't be able to take advantage. But how many real estate investors are unaware of these things?
A ton, because many of them are mom and dad landlords doing what? Single family investing.
Yeah,
They don't
single
know.
family just doesn't sound good to me.
It used to, because when you didn't know anything else, but when you know that there's apartments out there, you get pretty excited. You get juiced up on that.
It seems like in the last 3 to 5 years, apartments are the big rage. Why haven't anybody vocalized earlier?
I think just a lack of it. I think there was many people join and they learn from these real estate clubs. I don't believe in syndicating money from other people and then giving that to somebody else. I will run it myself. I will create the management company. I will create the team. I will sign the recourse note or the non-recourse note on the dotted line. Some of my peers have figured out that there is a hunger out there, and they raise and they syndicate money, and then they go and they give it to somebody else. But that's not what you promise the investor. You promise the investor this return. How are you going to guarantee that if you're giving it to somebody else who doesn't have skin in the game? I believe in skin in the game. On the latest deal that we're doing right now, we just closed the equity round, raised just right around $13 million, 458 unit deal. I put $500,000 of my own money. Plus, it's a recourse loan for $27 million on the hook. I'm on the hook for that. You're going to get my best effort, because if I'm on the hook, my kids are on the hook, right? And I'm going to make sure that if I'm going to protect them and your money's next to mine, I'm going to protect yours too.
As opposed to a non-recourse.
Yeah, which means that the deal is sufficiently running, and the loan is secured by the asset itself, that it's doing well enough.
Why wouldn't you want to be like that?
You do want to be like that, but you don't make as much money on a non-recourse note. It's safer. I want a little risk. The more risk there is, I make more money. And if I'm making more money, my investors are making more money.
And when you say you run the deal yourself, like you're not out there mowing the lawns and fixing the freaking painted apartments, are you?
No, that's a mom and pop way of doing it. That's what you do when you do single family.
Somebody has to mow the lawn.
Somebody has to mow the lawn. In the early days, I was mom and pop. I did. I tried to do as much as I could. And as we grew, I realized that, wow, I can really get some scale if I bring in some people into our business. So for me, COVID-19 was the best thing that ever happened to me, because what happened was it separated the wartime generals from the peacetime generals. I grew up during the recession. That's when my career got started. So I'm used to hand-to-hand combat. I'm used to killing what I'm going to eat tonight. When people couldn't leave their houses, we were still renting apartments. How are you doing that? Well, because 3 years ago, I went to go see guys like you, and I learned that, hey, what could prevent you from, how was it? I sat with Gary Vee. Gary Vee said to me, figure out a way to put yourself out of business. And I sat there and I'm like, what the hell are you talking about? Figure out a way to put yourself out of business before someone else does it to you. And I sat there and I thought about it. It's like, okay, how do I go out of business? Leasing offices are closed. I need to be online. I need to have virtual tours. So 2 years ago, a young lady that's sitting in the other room, Tracy Tyler, she came to our company and she helped me create our first virtual tours. So, we got a few leases here and there over the years, right? The last 2-3 years. But when the coronavirus hit, people were at home. We were still leasing because they were going online, taking the virtual tour. We saw a spike in leases. Nobody wanted to leave, right? They were afraid to leave their house. The renewals went up. We made a ton of money during coronavirus. But also during that time, I also saw that, hey, it took my eyes away from scaling the business more towards operations again. And I realized we had some weaknesses, and we made some critical changes in our company. We are as strong as ever right now.
How long have you been going?
I've been in the apartment world since 2007.
Dude, you seem very excited.
I love what I do.
Is it because you're just constantly making loot?
Well, that's kind of exciting, isn't it?
It is.
Every single
you're making me want to write you a check.
You should. Every single apartment that I buy is another layer of protection.
It's almost better for guys like me or people listening to this podcast to throw you money, because then they literally just sit back and get a return. They don't have to do shit.
Most of our investors are going to be your professionals. They're going to be your attorneys, your lawyers, guys like you. I mean, guys that do really well at their number one job or their number one primary, but they have other money. Why do you want to put in the stock market? Why do you put in the stock market? Because somebody told you.
Yeah, I just got that Robinhood. You ever heard of Robinhood?
I have heard of Robinhood.
So someone told me about Robinhood, and they sent me something. If I sign up, I get a free GoPro share or whatever it was. Mm-hmm. It's random. So I put a little dough in the old Robinhood. Oh, shit, now I'm down. Stocks aren't for me, bro.
Yeah, because you know what? They go up and down. Apartments, they don't go down. Every single month we get our rent check. Every single quarter, I produce a distribution. In fact, we just did our distributions right now for our investors, where we're going to return $1.4 million back to our investors consistently. We did not stop. Unlike some people out there who discontinue distributions to our investors, we did not do that.
Oh no, I did. I have done well.
Okay.
It just went down a little bit today. So anyway, I bought a little bit of these shares and at $20.10. And my friend that was supposedly a day trader said I was stupid. Now they're $27.42 a share.
And then you're going to sell one day, right?
Yeah.
Yeah, you're going to sell and you're going to pay taxes on that $7 gain, right? But did you know that if you had money in the apartments, you can keep your shares, your stock, but you would create depreciation from the apartments that you would own.
Can that go against the money I make here?
That would offset your gain and in your other incomes, whether it's your W-2
even though you're
income.
not really losing it?
Yeah, that's how the tax law is written.
Dude, I got to take advantage.
I made money.
Even if I do it with your deal?
Yeah, I made 7 figures, but it doesn't look like I made 7 figures on paper.
So is it because do I own like equity in this particular property?
Yeah, so if you put 10% of the equity, you'd be a 10% partner in the deal.
So you LLC everything?
LLC, so you have a voice in critical
I
decisions.
don't want a voice. I just want a check.
Well, you'll get a check, but you'll have a voice. If we want to sell, if we want to refinance, get critical stuff like that.
What if I get a bunch of people that want to give you money?
Then let's put the money to work. Let's go buy an apartment.
Yeah,
deal.
but what would I get just to bring you money?
Well, that's a separate conversation.
All right.
We're having dinner tonight, right?
Yeah.
Yeah, we can. Hey, a couple bottles of red. We can figure it out.
Well, it's only because, I know a lot of people that always want to give me money. Like, I know what to do with it. Like, I don't know, bro. I only know a few things, but I am starting to look into the old multifamily.
Well, because people trust you. You have a good name, and they think, you know what, I want to do what Brad's doing. That's what they're doing. So you're getting exposed to the right people, and I think if you have a good name, it's because you have a good eye for people, and you're thinking about, I like that guy. No, I don't like that guy. Oh, but that guy, I like that guy. Then next thing you know, you have dinner with them and over a couple glasses of red, you figure out a new plan.
Well, it sounds like you got the plan.
I got the plan, but you know what? I need more equity. I do, because I want to keep growing. I mean, we got $400 million of assets. I've got a really good business plan. I've got a really good company. I mean, I've got the guy that's the head of my operations. He wouldn't have sniffed me 3 years ago, but because of the brand and our reputation and me telling our story and how good we are and all what we've done for our investors, he was running 23,000 units. And now he's at my company running 4,000 units. He's drank the Kool-Aid.
He's sniffing you now.
He's sniffing there now. But I couldn't have got his attention 3 years ago, nor could I probably have afforded him.
If you guys ain't following this dude, you better go follow him on Instagram at Apartment Rockstar and Twitter, as a matter of fact. Website's rockstar-capital.com. If you want to throw some coin your way, you don't dick with unaccredited though, right?
I have both investors.
So
yes.
so somebody doesn't even have to be an accredited investor.
They don't have to be an accredited, but they do probably need to have a minimum of 50 to 100,000 to invest.
Why?
Well, that's our minimum number.
Oh, okay. So if someone says here's 10 grand, you say pass.
It's too low.
Well, what if I got 5 guys with 10?
Then you can maybe create an LLC and you can be the manager of that LLC.
Yeah, we got to figure this out. I know a bunch of people with 10.
Yeah, we can figure it out.
I know a shit ton with 10. Collectively, that'd be 10 mil.
Yeah.
Interesting.
But I like that though. We have a mutual friend who's wanted to help the masses out, and that's one way of doing it. You can definitely do that. I mean, there's a lot of money out there in the world. I think we've both seen that there's a lot of money out there in the world. I mean, where you can raise a lot of money, but you got to have the right voice, and you got to have the right mousetrap. You got to have the right plan to move forward with.
Yeah, you get a lot of followers. You already get a lot of followers. The bomb squad is going to go follow you, but the question is why do you have all those followers? Is it because you're giving out tips, or are you just a high energy?
Well, I'm a big guy. Look, I went to go see Gary Vee back in 2017, and he's a big jab, 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 right hook kind of guy.
Yeah.
So I really believe on helping. Look, it's easy for me to talk. It's easy. I love what I do, and how do you not when you understand the magic formula, $1 equals 17, right? I get excited about it. I get excited about building something. I've already achieved any possible goal I had in my life. Now it's about, man, can I scale? Can I really compete with the big boys? Can I do something a little bit different? And that's where I'm at. I'm just chasing to see if I can get there, to see if I can hit the Billy. I'd like to be a Billy. I want to try to see if I can get it. I want to hit a crazy, unimaginable goal. But I can't do it if people don't know you. So you've got to go out there and you got to keep spreading the message and giving out free content. But recently I've had people that have asked for, actually for years, people have asked me to teach. I just don't have the time. I'm working on my own stuff, right? But now we have an educational arm of our company. Go to apartmentrockstar.com. You'll be able to scroll down our education. There's modules where I'm doing one-on-one training with you. I'm sitting there. We're going through how to invest, how to look at the deals. What, if you're going to invest with somebody else, what you should be asking them. Or I also sell one-on-one coaching as well.
So why wouldn't someone just do it themselves?
Because you'll make mistakes.
Will you?
You got to pay to play.
For sure.
1,000%.
So if I'm like, shit, dude, I'm Brad motherfucking Lee.
Yeah,
I don't need the Rockstar, dude. I'm going to just take my loot.
Yeah.
Because I got shit tons of it.
Yeah.
Not really. And I'm going to go buy this unit over here. I don't need you.
Yeah.
I'm going to make a mistake.
You're going to make a mistake. What you're paying for is momentum. You're paying for the roadmap. Because what happens, right? If you're in that, you can have the best, sexiest looking car, but if you keep hitting potholes, you're going to ruin that car.
What kind of mistake will I make, though? Because I always think to myself, because, again, I am considering getting, starting to buy some of those.
Did you know that the number one thing I do is I replace air conditions? Would you have thought to do that yourself?
No.
No, you would.
First thing I would have done is bought the building.
And run it as is and not put any money into it.
No, I would have bought the building, and then I would change the name.
Yep.
Just because I want to name them.
Yeah.
Just anything
Okay.
like, I don't know. I don't know. Even Aria Gardens, who knows?
Yeah,
I
yeah.
mean, I just want to name them. I think most apartment names are stupid. If it's a good name, I'd leave it. But I'm going to buy it, step one.
Yeah.
And then I'm going to walk in and I'm going to raise the rent first. And if you don't like it, beat it. And then I'm going to freaking sit down and make sure I lease out all the buildings or the units that someone vacated.
Right.
Then I'm going to go see what needs to be fixed. But I'm going to raise the rent first. Why? Because I don't think people are going to rent over $20-$30. And you just hit $10 makes you a shit ton of money. So all I got to do is convince them to give me $20 or $30 more dollars. The fact that I'm going to start picking up your garbage, I'm gonna charge you $20 extra.
People's got to see value in the.
Yeah, I'm gonna pick up your garbage.
Yeah. Oh,
Put it
you
outside
didn't say
your door.
That. You said you're going to raise it day one.
I'm going to raise it regardless of what I do.
So it's
Why?
funny,
Because I don't think, and this is the mistake you're talking about. See, and I'm just talking out my
And that's
ass
all
because
got
I
love,
don't know
stretch
how
it
to do
out.
it.
Yeah.
But I'm going to raise the rent because what's $20, dude?
But did people's income go up by $20?
I don't care. I bought it. I own it now. It's worth more because I own it.
Right, but-
Your rent's now $920, sir.
Yeah, I got it. But you're attracting the people that are there are attracted to that community before you ever came there because of what it offered at the price point that they're willing to pay. But how are you going to get a higher person in there at $20, $30, $50? You said earlier $100. There's a big difference between somebody paying $800 rent and somebody paying $900 or paying $1,000. I promise you, because I live it every. Oh yeah, I live it every single day.
So you would think $920 versus $900. Who cares?
Yeah, no, it's not. You got to. I've learned these lessons. I understand what people will leave over, and they got to get value. Now, your valet trash idea is beautiful. That's one of our strategies where you pay a company $25. I'm sorry, excuse me. You pay a company $10 to put a little trash can outside their door, and they come pick it up 5 days a week. You keep your residents from having to go to the trash can, probably getting hurt. I had somebody who went dumpster diving once and blew up their face because they tried to recycle a fire extinguisher that somebody else threw away. Very, very bad situation. But you keep them from getting hurt. You provide an amenity that they don't ever have to touch the stinky trash or leave their house at 10 o'clock, midnight, whatever, because that company will come late at night, and they'll pay $25. You're paying the company $10. You're making a $15 spread. Now, I said to you earlier,
Plus the evaluation.
that's what I'm trying to say. So I said to you earlier, a $10. See, it doesn't have to be a rent bump. It can be any NOI improvement or any expense reduction, right? So if you do a $10 increase on 100 units, that's $200,000 evaluation. If you're doing a $15, now you've increased it by $300,000. You haven't had to do a damn thing.
Is the evaluation worth anything immediately or no?
Yeah, it is, because as soon as you get it valued, you can borrow 75% against that valuation. And you're going to take that loan. I need to explain that a minute there. We're going to revalue the property. I'm going to take a 75% loan against
Which is tax-free.
I'm going to take a 75% loan against the new value. I'm going to pay off the old loan, which is based at a lower valuation, and that spread is tax-free. It's like getting a second on your house. That's what it is.
Yeah.
And you return it back to investors tax-free. And that's our goal. We do everything we can to keep heads in beds, and we're going to push revenue. We're going to optimize expense. You talk about toilets. We do a massive water conservation program. We're going to change out those 1970s, 80s toilets on that apartment place you're buying. We're going to put a 2020 toilet in that's pushing out 0.8 gallons of flush versus 5 gallons. We're going to save hundreds of thousands of dollars in the water bill. We're going to save millions. We're going to create millions of dollars of valuation.
What about like bandwidth?
Oh, like
put
internets?
Yeah, like put in a tower or cell signal better than what's at some of these places?
Yeah, we're looking into that. We're trying to figure it out because to me, that's a basic service. You got to have it. But a lot of our deals that we buy, they don't even have washer and dryers in them. Well, I think people are going to be renters for life. I don't want them going to the laundromat. I want them to stay there.
Yeah.
So I will put a washer. We put a washer and dryer in every one of our units because I believe this is their home. And nobody wants to go to some stinky laundry room either on site or down the street. I want to keep them there. And so we put a washer and dryer in there. So that's a basic service. We changed out the boilers. I want consistent hot water 24/7 because everybody's on a different schedule. Nobody wants to take a cold shower if you don't like cold showers. Nobody wants to wake up in the morning and have cold. Their baby needs hot water for whatever reason. Nobody wants to go through that. So we have hot water, cold air, and IT is the other. I'm sorry, IT. Bandwidth is the other one. We're trying to figure that out. It's pretty expensive right now.
What about if someone doesn't want to pay their rent?
Well, it depends on what state you're in. I'm in Texas. It's a very landlord.
All your deals are in Texas?
All of my deals right now are in Texas. Now, I am going to go national. Let's do one in Vegas. You can do one in Florida. Let's wherever you want to go. But
I kept asking, buddy, why not here? And he said no.
We use the best marketing tools that there are in the industry, and we will have comprehensive deep dive market studies, and we know where to go. Obviously, you guys got hit hard by COVID. It's a very service industry. Probably don't want to be here, but Houston, Texas,
and it's transient anyway.
And it's transient. Houston's more stable. It's got more legs on the stool.
What about out in the middle of rural bumfuck Egypt?
If it's a red state, I want to be there. If it's a blue state, I don't want to be there. You know what I mean by that?
Yeah.
Yeah, I don't want any high taxes. I don't want to be in California. I don't want to be where.
But what about like way out in the country almost?
I think
not many people out there, but sure enough, there's 1832 units out there.
You know, that works, but why would you buy 1832 when you can buy more? Because you're buying yourself a job. Anything 50 and under, you're buying yourself a job.
Can't you just give it to a property management group?
You can, and you can try that, but I think you'll realize that there's better efficiencies the bigger you get. Like we started out like that. We have a 100-unit deal. We have a ton of 100-unit deals in our portfolio. I've got 21 assets in my deal that consists of the 4,000 units, and half of them are in that 150 and lower range. I realize that as I get higher unit count, you know what I get? I get more revenue. And what do I do with that revenue? I don't eat it. I put it back in the company. I'm going to be able to pay more to a better manager. You got one quality manager at 3,250 units. You have a whole other quality manager at 400 units.
You can't just hire your brother Chuck.
No. Our brother's name is Nick, but I don't want him running my deals.
I was just making one up.
No.
But
don't do family. Avoid family, man.
See, these are all the mistakes I'd be making.
That's right. You need a partner.
Yeah, I'd hire my brother. Hey, go. You can live in one of them if you want. But
No. Don't do that.
What about like repairs you weren't aware of? What if you buy a property and you didn't know, but dude, there's some serious shit wrong with that.
So we're going to do a comprehensive due diligence report on this deal before we ever buy the deal.
What's that cost you?
It depends. It's anywhere.
It costs you.
Yeah, $30 to $40 a unit, and then we'll go unit by unit, and we'll take pictures. We'll put it on software. We'll make sure we have all that written down so whoever's manager can have access to that. We'll also go through the lease audit file. The lease file audit, go line by line, make sure we know the names match, make sure we know what the rents are, because they give you a rent roll, but it ain't nothing. It doesn't know if that rent roll is right. It's whatever's in the contract.
That's what I was going to say. Are they ever lying about those?
All the time. Yeah, buyer beware. But you got to know what you're looking for. Then when we're done, we're going to do a big renovation plan. But we're also going to try to have 6 months reserves, because you never know what's going to happen.
Does anybody know when you buy the units?
Yes, because day one, you have to let the residents know there's been a management change.
That's what it's called?
Yes.
Management.
A change of management. They get a letter on their door that says, hey, the apartment complex has been sold to so-and-so. This company has been engaged to manage the company. Please continue to make your apartments to ABC Apartments, your check to ABC Apartments.
Is there any service that you've discovered that's like everybody's in love with that would allow a $10, $20 increase?
Well, you hit one right there with the Valet trash. Doesn't that sound logical? Yeah. You get $25 of revenue, you get $10 of expenses, and you got $15 of profit. You didn't have to do a damn thing.
Yeah,
that's genius.
As long as those cans are good.
Oh, the cans are good. The company, you're going to get a reputable company. They monitor the integrity of the can. They change them out. Yeah, for sure.
As long as it's they don't smell up.
No, they don't.
But yeah, dude, that'd be a huge thing.
I like to do things that are very easy. For example, part of our due diligence is that people try to hide Fido and Felix from us. They don't want to let us know that they got 2 pets.
Yeah.
We charge for pets. We charge a deposit. We charge a monthly fee. And so part of the due diligence, we got to make sure we know who's living where. And we charge you because I think what is like almost half the country has a pet at home, right? So we're going to make money, but we don't have to do. We're making money on that without having to do anything.
So you would not buy a single family unit?
Knowing what I know, no. People that buy a single family unit are doing it for a couple of reasons. One, that's all they can afford, or they don't know any better. But you never see some single family king with 100 units, 100 single families, because they realize I can't run them all. You need to have
they have
all
a
in one
property
location.
Because my buddy has about, I think, 80 or 100 houses, and I'm wondering why. Because like I kept watching Grant with him, and I'm like, dude, why are you doing? Because if someone moves out of that one, dude, it's empty.
Yeah.
Not everyone's moving out of an apartment building, so 9 times out of 10, at least your mortgage is getting paid from the renters.
Yeah, more units is better for sure.
Yeah, and then I know another guy is pretty clever of this dude. He looks for 2-bedroom, 1-bath, single family homes. He teaches people how to be their own, basically, architect. They go in and refurbish it, build another bedroom and another bathroom, and now it's a 3-bedroom, 2-bath for 30, 40 grand.
That's really smart. Yeah, because the cookie cutter, the model is a 3-2, 3-2-2, 3-bedroom, 2-bath, 2-car garage.
Yeah, so this guy, he's stealing the 2-bedroom, 1-bath.
Yeah.
And then he's an architect.
Yeah.
So he basically just goes, beep, makes it a 3-bedroom, 2-bath. There's nothing, you don't need a bunch of permits the way he does it. And basically you turn it into a 3-bedroom, 2-bath instantly. And he says he's making $100 grand a house just flipping houses.
And he's paying taxes on that, right? A lot of taxes on it.
Yeah, I don't know.
He's playing short-term capital gains on that.
That's funny.
That's
see, you're playing the smart game.
It's not about what you make; it's about what you keep, right? You've heard that before.
Oh yeah.
It's about what you keep,
dude. I've made my mistakes. Trust me.
So
so
you want to put $1 million
bucks
in it? What if I said that you could probably keep 800, if not more, of your $1 million?
When you say keep it, I mean it's already mine. I've already paid taxes. It's net dollars.
Let's say $1 million gain from the $1 million that you're going to make, because I'm going to return it back to you. I'm going to try to do my
then
best.
I could keep 800 of it.
Yeah,
it's pretty good.
yeah.
How do I keep it all?
We have to do a good job. You got to do a really good job of it.
How do I hold you accountable?
I'm held accountable because I have my own money in the game. I invest skin in the game and all that.
So it's just trust.
It is trust, but if I put 500,000 into it, that's a lot of trust.
Yeah, I'm going to be your best investor. You know why?
Tell me.
Because just send me my check, dude. I don't care what you're doing. When the check doesn't come, that's when I'll be your worst investor.
Yeah, and that happens.
But if the check shows up like you say it will, like, dude, I don't really care how you're doing it.
Yeah.
As long as you're, being honest, which I know you are, because you wouldn't be in business this long. You've been in business for quite some time.
Yeah.
You're rocking 4,000 units.
4,000 apartment units.
That's a lot. The 400 million under asset or under management.
And I'm a 2-time national apartment independent owner of the year.
Why Houston? Notice I said Houston.
Because that's where I moved after college, man.
So you just ended up there.
I ended up there. If I had grown up to school in Florida, I probably would have been able to be just as successful, because Florida's a good market, or Arizona, any of the red states, anywhere where they allow business to be business.
Well, let's hope here pretty soon that's everywhere.
Let's hope so.
Now,
Did you
why
vote?
not?
Did you vote already?
No,
What?
I don't believe in that shit.
No, Brad, you got to go vote, bro.
Dude, you know for a fact that your vote don't count, right?
I don't want to hear that. The vote. I'm gonna.
You're
do
part
my
of.
best.
You're part of the delusional.
No, I'm not. I know what you're saying.
There's 538 people who pick the president. Period. You don't.
The electoral college.
We don't.
Yeah.
Yeah, they do.
Yeah.
They pick them.
Yeah.
Okay, whatever they say. Now, supposedly they're saying what we say.
Yeah.
When in reality, most states, they're not held by law to pick who we tell them to pick.
Right.
So guess what?
Yeah. Has that happened yet, though?
What do you mean?
Has that
Who knows? Have you ever counted the votes yourself?
No, I don't.
Trump won. How the fuck do you know who won? We don't know who won. We go with whoever told us they won. They won. Yeah. Right now they say Biden won. What's everyone going to say?
They're going to be pissed. They're
going to say bullshit's fraud. Like, dude,
Yeah.
you don't know.
Yeah.
So I'm not going to go waste my time voting like it matters. Now, will I vote local government? Absolutely, because there's no electoral college voting the local governments. Yeah. But that's just my belief. Listen, I don't want to influence anybody not to go vote. I say go vote, but I'm not. It's a waste of time.
But you got to vote. You can't vote for local and not vote for the national, because it's at the
local.
same time.
My vote matters.
Yeah, well, go vote. Just when
national
you're there,
does not.
Just make the vote.
Yeah, but national does not. Do you believe it does?
I believe a lot of things that I'm probably not going to talk about right now on the radio. I watch a lot of different things and I read a lot of different things. I don't want to believe what I think might happen. It would be a sad day if it doesn't come out a certain way.
Yeah, well, tell me about that.
I think
what would happen to you? What would happen to these funds?
It just depends. Here's what I believe. The smart money is doing what I'm doing, and the smart money is in Congress. They passed the laws. We've gone through how many presidents, and this law is still there? We talk about taxation of the rich. We talk about the vilifying the rich, and yet they leave one of the richest tax incentive laws in there every term.
Which is what?
Depreciation.
The old depreciation.
Why does Donald Trump not pay a lot of taxes? Because he's a real estate investor.
Yeah, and he depreciates all those properties.
Legally, it's legal. It's 1,000%
So
legal.
it's like, hey, I made $30 billion, but I'm allowed $30 billion in depreciation. Yeah. And in fact, a lot of times, let's say I made $20 million, but I can actually claim $27 million in depreciation, which means technically you get tax credits.
Yeah, you get carry forward losses, which I have a ton.
Yeah.
I have more depreciation than my income, so I get that. But I want to make sure people are listening.
Is that a loophole that these richies put in there?
I think they did. Yeah, because back in the day, who had real estate? Richies. My mom and dad, we lived in a single-family house, 1,400 square feet, and that looked great to a lot of people who were living in the apartments, right? That's what I grew up in. But my point to that is that this real estate investing is open. It's like the red pill, blue pill moment. And that's what happened to me at that real estate club. Is I got shown a different way. I was on a certain path. I have an engineering degree. I was on a path of working in corporate America for the next 30 years. That path changed when I discovered real estate education. And then I took a little risk walking away from my day job, which is all I ever knew, which is what I was told by my mentors, mom and dad, or the college professors or whoever, to change my path. But today, I've got people that are engineers that invest in me. I got people that are teachers that invest in me. I got people that are all walks of life. They don't have to be the richies. Their last name isn't Kennedy or Carnegie or anything like that. I have people like her last name is Martinez, right? And they're doing this.
Where do you find them?
Where I find them, they find me now. You know, before I found them in the real estate club, I created quite a name for myself because of my track record. But now people reach out to me. We do a really good job of social media pushing our brand out. So people are reaching out to me. Social media has been the great equalizer.
The old social media.
Social media.
Dropping bombs right now with old Mr. Martinez. Dude, I'll bet you a lot of these listeners are going to want to invest with you.
They should hit me up at the Apartment Rockstar on Instagram and send me a DM. Let's get involved.
And if you guys invest with him, dude, tell him I sent you so I get a piece or something.
Yeah, go to Rockstar Capital.
Is that illegal? Do I get a piece?
It's not legal.
It's not legal.
It's not legal.
Damn.
It's against SEC rules.
Dude, I make people money when they come on my podcast. One dude had this $20,000 program, and I'm like, yeah, you know, I'll put you on the podcast. Dude, he did $1 million. And I'm like, dude, I didn't know anyone listening to me had $20,000. That's when I realized, shit, dude, I got a lot of listeners,
an audience
that are actually, you know, entrepreneurial. They're saving their dough. They're looking for things. I think you might get some action here.
I think it might work.
I need a piece for my niece, folks. Just put my name. Just tell them you came from the Bomb Squad. That's good enough for me. Just credit. Where would they go, by the way? Seriously.
Yes, they can go to rockstarcapital.com and they can go to the Invest Now link and they can put their information there. They'll get an email from our investor relations people with some more information that will help them get their investment knowledge. Or, hey, people that want to try to learn what I do, we sell coaching too. Go to apartmentrockstar.com and sign up for our educational courses.
I would more recommend that they just invest, because
I
doing
agree.
what you do, dude, that's you gotta pay attention. You know, it sounds fun. You make it sound fun, but dude, that's a lot of work. Why wouldn't I just give you the dough and let you do it?
I think, look, in life, you should double down on what you're good at, and you should hire out your weakness. So if you're in accounting and you're an engineer and you don't have that sales guy, you don't have that in you, double down. If you're really good at your day job and you're making $500,000, $600,000, $700,000, you can't make that in apartments immediately. It's going to take some time to replace that income. You know, it's going to take, and then during that time, things can happen. You're going to make mistakes, right? So you got to pay to learn. You got to pay to be with somebody. I think it's important to go with your gut and your instinct. I think it's important to invest in yourself, which is why I do these educational courses, because I think before you invest in anything, you should invest in yourself. I didn't invest in apartments day one. I went and I paid $10,000 for an educational class, and I got in that network, and I bonded with like-minded people, and I learned from them, and then I did it on my own. I made my mistakes. I've got better. I don't make those mistakes. I make different kind of mistakes today, and I get better. And as time goes on, that's what you're paying for. You're paying for that knowledge. You're paying so that you don't have to make mistakes, because it's all about momentum. If you always heard about those horror stories from that guy that bought that single family house that hates it. He had the worst tenant, whatever, because he didn't follow the principles of property management. He didn't do a good credit check. He didn't do a good reference check. He didn't replace things that he should have replaced. He tried to just buy it and try to run it like that, not realizing that things were going to break, and it turned into be a horror story. And he doesn't want to do it anymore.
Have you ever heard of the opposite? Like, dude, I bought it and turned around and sold it 6 months later for twice my money.
That can happen. You got to have a certain situation. Because like you said, maybe you can raise rents. We try to buy deals that are undervalued. We try to buy deals that are the lowest in the submarket, figure out why are they lowest in the submarket, and then change it.
Are you running around looking for these, like running around Houston looking for property?
So let me tell you what happens. When you get a name in the industry, people send you deals. I get most of my deals, most of my entire portfolio is off market. People send me a deal. And I look at it and I'm like, So with Sam, the gentleman you met earlier, Sam Morris is our chief investment officer. He and his group had probably underwritten well over $1 billion in the last 12 months of real estate. And we try to go through the deals that fit us, that fit our business model.
Are you trying to just put as little down as possible?
No. I want to go in around 75-25, which is market. Some guys would do 80-20. Yeah, sure. The least you put into it, maybe the higher return, but the more risk. What happens if people stop paying rent, like you said? What happens if there's a downturn? What happens if your taxes and insurance go up? It happens, right? I don't want that to happen. I want to have a 25% buffer between 100% and what the debt is, and then what my debt service is, so I can have a good break even, and I can sustain the ups and the downs.
Can you go get all of your equity out right now when interest rates are so low?
Oh my God, we just did a big refinance event. I told you about this earlier. We bought a deal in 2016. We paid $20 million for it. Over the next 4 years, we increased the valuation by more than $10 million. And 60 days ago, we did a big refinance event. We went and dropped our interest rate by over 1% from when we had it in 2016 to what we refinanced it. Our debt service actually went down. I think it was $15,000 or $18,000 a month. And over a 12-month period, that was essentially another quarter's worth of cash flow.
Do you ever take the dough, though?
Yeah, we take the dough. What do you mean I take the dough? I'm going to take the dough, and we're going to refund. We refinanced it, and we gave $4.5 million back to our investors. And we
as a loan?
We did a new loan, paid off the old loan. There were whatever fees to the bank, whatever. The difference was around $4.5 million. Gave it back to the investor. If you're a 10% partner in that deal, you would have been $450,000. If you would have been a
tax-free.
Tax-free, yeah, it's a tax-free event.
Now, when you give me the $450,000, how do I report that?
You don't. It's not reportable. It's tax-free. It's like taking a second on your mortgage.
Well, what if they say, hey, I noticed in your bank account you received $450,000?
They're not going to tell you nothing.
They don't?
No.
Dude, you got all the rules. Hey, Sam outside, where'd you meet him?
Man, Sam and I met at church almost 20 years ago. Both of us were newlyweds. We didn't have babies yet. He and I met in our church group. And became really good friends. I like people that are smart. I like people that bring something to the table. And I just always like Sam and I have like a brotherly bromance kind of thing going on. We talk shop all day long. And so about 2 years ago, he's a big bank president, has done well over $1 billion in apartment loans, has seen my growth over the last 13 years. Was one of my very first investors in my first deal. He believed in me. He coined the phrase in our company, "You back the jockey, not the horse." And so no matter what's happening, it's like, I know if I put money with you, it's going to be secure. So about 2 years ago, he approached me, and his bank had sold, and he walked away with a nice, tidy sum. And it was a right time in his life. He was in early 40s to go a different direction. He was like, I'd like to help you scale Rockstar. And so he joined us 2 years ago, and it's like, man, I have a banker sitting next to me every single day, going through this stuff. He knows his stuff, man. He's a bank president. You don't become bank president and have shares in that bank and walk away with what he walked away with, just being anybody. So
is it fun to go out and find these properties for you?
Yeah, I mean, the whole process is fun. I like finding the deals. I like coming up with the equity is a little stressful, right? Because I don't have it. I got to raise it, right? And you always wonder what you're going to do. That's a little stressful, but that's part of life, right? I like coming up with the business plan. I like winning. And I want to be able to come up with a better plan to win than the guy before. You know, as I said to you before, I grew up during the recession, the Great Recession. That's how my career got started. So either I put you in the dirt or you're going to put me into the dirt. And that's a mentality that I've carried on. So I like coming up with a better way. I like watching the deals rise. I like being able to refinance because that's when we make all of our money. But I really like right now is that we have shed our mom and pop skin, and we've really added some real players to our company. I wouldn't say legends, but industry professionals, people that have brand names that could work at any other company in Houston doing this. And, you know, right now it's been great. It's been a great ride. I can't wait to go to the office every single day.
Dude, if I were listening to this, I'd be thinking two things. Either, number one, how do I invest in this deal?
Yeah.
But no, actually I wouldn't, only because the minimum in is $50,000.
Yeah.
See, that's the problem with most people. How do you save $50,000? How do you make $50,000 so they can give it to you to start with?
I think everybody should get started first in single family. So you understand a little bit of what I do. We take care of people. We keep heads in beds. If you're a single family guy, you learn what it's like to be a landlord, and you probably realize I don't like it. Number two, you can make some money on a single family. You're going to make $20,000, $25,000. Then you need to stack it. Then when you get to a certain level, you need to get into wealth accumulation. You need to get into wealth growth. You got to put that into a bigger vehicle like apartments. I have many of my investors got started owning 6, 7, 8 single family houses. Right? They all started at one. In the end, they realized, I don't want to do this anymore. I want to give it to you and put into these, because they also don't get those tax benefits I'm telling you about are not available at single family. They're only available in commercial and multifamily.
Commercial, though?
I believe so.
I think commercial is going to have a problem.
Yeah. Yeah.
Personally.
Yeah, I don't have office space. I have apartment complexes.
Yeah, well, I think office space is not going to do so well.
Yeah.
Why? Because, again, I mean, I sent, let's say, 70 people home when the COVID hit.
Yeah.
And then I'm like, okay, well, we can come back. And the people are like, well, really? And I'm like, hey, look, if you're scared, you don't have to come back. You can work virtually. Yeah. And literally 2/3 of the company decided to stay home. And I don't really care personally. And so now I've got all this office space and I don't need it. And so I'm like, dude, I wonder how many commercial office space is around the country just not being rented.
I think that story is being replicated over and over and over. We're very unique, right? We didn't have our first office until COVID.
Can we convert this into an apartment?
You can convert anything into an apartment. I mean, yeah.
Well, I mean, I'm just trying to think, like, how do you rescue office space? If apartments are doing kick-ass, why wouldn't they just convert one into an office? I mean, an office into a condo.
I've heard people buying hotels and converting them into apartments.
What about, you just want rent, right?
I want rent and I want expense reduction. So in expense reduction, I'm going to go and I'm going to replace the air conditioners, right? Because I want to keep reliable equipment. I want to keep heads and beds, but I also don't want to pay for AC repair. And if I bought all new with warranties and
but that's an expense.
It is, but every dollar it adds to the NOI. So I can get a $10 rent bump or I can get a $10 expense reduction per unit. If I don't have to fix ACs, that adds to the NOI. If I put new toilets, if I put water conservation devices on the, like aerators and low flow shower heads, I reduce my water conservation. Reduce my water consumption. That flows from expenses straight to the NOI, which creates its valuation.
So you say NOI is the key.
Oh yeah. You want to make that bad boy as big as you can. Rent one way, expense reduction is the other.
So rent, you collect it. Let's say it's $100,000 worth of rent.
Yeah.
And bills to operate are, let's say $10,000, $15,000. Plus you got the mortgage. Mm-hmm. You take that off.
Yeah, the mortgage comes below the NOI. So the NOI, right? You have your rental gain. You have your operations, which are your expenses to operate to get the rental gain, and your NOI. And then below that is your debt service.
Okay, so then what's below that?
Capital improvements, like if you want to buy like things that don't go into the expenses, like a new roof, that's not going to go into expenses. That goes to the bottom of the line.
Why?
That's how it is. That's how it is in the accounting.
See, this is the type of shit I'd just invest with you for, because that's stuff you got to learn.
Yeah. Because when you think about it, if I put it into the expenses, right? I put that roof into the expenses, I've reduced my NOI, right?
Yeah, well, I thought that's what you have to do.
The roof is a capital improvement. Like the air conditioners, those are capital improvements. The appliances, those are capital improvements. You put them below the line, which increases your valuation because they were optional. You didn't have to spend them. You need to spend paint.
Now, if somebody didn't know to do that,
Yeah,
how could they make a mistake?
they would lose valuation of their investment.
Because they would call it a expense?
Yeah, I would buy it. I would look at that deal, and they're going to want to sell because they can't make any money or they can't pay their debt service. I'm going to buy it, and I'm just going to play an accounting switcheroo, and I've increased the valuation.
So what if I found a kick-ass deal? Do I call you?
Yeah.
Can I make money that way?
Yeah.
Because, like, if I looked at a kick-ass deal and I said, wow, man, these guys are, putting new air conditioners in here as an expense, that's a big mistake.
That's a big mistake.
See, I would have done that.
Dude, you're talking millions of dollars if they did that.
Are people out there doing that?
No. Maybe mom and pops do running 10, 20 unit deals, maybe.
Not big deals, though.
No.
So when you're driving by, like, those big units that go blocks, there's real businesses running those.
That's the Blackstones and those guys.
How come they don't buy them all?
Well, buy what? What do you mean?
Like, how are you able to find any? Like, if it's such a hot market, why aren't all the $1 trillion Blackstones buying them all?
Because they can't buy everything, man.
Why not?
Because they can't. They can't get to everywhere.
It's just they can't get to enough places.
Can't get to enough places. So, I mean, doesn't mean Blackstone's out in Houston, Texas. They are. They're just, you've got half the population that rents in Houston. You got 4 million people, 2 million rents. Can't be everywhere.
What about, like, when the flood smacked you guys?
We were fine.
Didn't ruin anything, cost repair, damages?
No, because when we do a renovation, we're going to do a comprehensive renovation. We're going to improve the drainage, and really, I've been through that before. We had our maintenance teams out there clearing the gutters, clearing the drains. We identified them and fixed them and made them as wide as you could during the renovation. But I had I got some video there where my guys are there in the rain, and you see them sweeping water out. But when they're not really sweeping water, they're sweeping the leaves out of the drainage so that people's apartments wouldn't flood. And those are heroes, man. Those are guys that are out there taking care of our people. We're considered essential workers. So we're one of the first ones to go back to work because we have to take care of 4,000 families.
You wouldn't go to Austin, Texas?
I would go to Austin. Austin is expensive. The cap rates are really low. So and you get good rent. Don't get me wrong. It's expensive because it's California and Texas, right? And it has a California vibe though. So it's very liberal as well. I don't rock that very well, but
I don't think any business person does.
Yeah, I don't rock that well. But people want to live there. And if you can find the right deal, you can make some money. But you got to worry. You got taxes on the rise. You got insurance on the rise. There's a lot of other factors besides just, whatever, the cost of living. And there's other things there. I like Dallas. We're going to go to Dallas real soon. I love Houston.
All of them's in Houston?
All mine are in Houston. I have 2 deals in South Texas, closer to where I'm from. And I went there because taxes went a little crazy in Houston. And so I wanted to go to a secondary market to see if like you said, in the middle of nowhere to see if our market worked. And it did. So I found 2 towns, Corpus Christi and Kingsville. We went down there. We bought 2 Class A deals that we bought for a really good price. And we're making really good money on those.
So I want to, tell people if you're listening and paying attention, it's going to be easier just to invest and or, have you coach them.
Absolutely.
Is coaching expensive?
Coaching right now is $20,000 for me for one-on-one coaching, or you can buy the modules for like $1,000.
So someone gives you 20 G's and you'll teach them the ropes?
Yeah, they'll give me a call. We will go through their plan. I'll make sure they have the money first. I don't want anybody to take $20,000 if I don't think you have the stick to swing. I want you to make sure.
Yeah, because plus they got to do something when you.
Yeah, they need to find out what their liquidity is. If they're only $20,000, I'm like, no, dude, go buy you a single family house. Don't give it to me. Because that's not going to, you're not going to be happy because you think you're going to buy an apartment deal, and I'm not going to feel good taking your money. I'm going to make sure, I'm going to qualify you like I would be a bank. What liquidity do you have? What are you chasing? How are you going to operate this? I don't believe in third party. I believe you got to run it yourself because that's how I did it.
Yeah.
If you're going to ask for my coaching, right? I mean, hopefully you'll do it my way. But if you don't have the stick, the swing, I'm going to send you to single family. Say, hey, you need more money. I'll show you how to buy a single family house. And let's show you how to do one of those. And you hold it for 2 years, 3 years, increase the valuation of it, and then sell it and take some of that money, do it again. And when you got $100 or a couple $100,000, then come back and see me.
Dude, you're a freaking walking encyclopedia on the real estate business.
Man, I love what I do, man. How can you not love what you do? It changed my life.
Now I know why they call you the Apartment Rockstar. You're like excited. Sam's not the front guy. You're the front guy, aren't you?
I'm the front guy. What are you, Sam?
So when you guys
Sam
met,
been with me for 2 years. I started this business a long time ago.
but when you guys met,
Yeah.
did he just like pick up the vibe because of your energy?
Probably. I mean, I never asked him that question. I mean, I think we met in church, so obviously it's a really safe environment to meet. We were newlyweds at the time, so we hung out and had a bunch of dinners.
See, you guys are newlyweds. Congratulations.
Well, both of us were. He's married to a beautiful woman.
I got you.
We hung out. We've been at Disney World together. We just have a good relationship. And over the years, I think he did his thing. I did my thing. I think he saw me take a risk in 2007, and then he invested in that risk in 2011 when I went out on my own, away from the partner. And he just watched me grow. And I think he realized that, man, there's something there. I think I can help him get to his goals, help him get to his goals, and we can do really well together.
Boom. That's how you do it
Yeah.
right there, folks. Well, dude, I appreciate you coming out here for the old dropping bombs episode. I might, drink a couple Reds. Actually, I'm on keto right now. I don't know if I'm going to be drinking Reds,
Okay.
but I might do a vodka soda.
I like vodka.
The interest level's high. I can tell you right now. I'll invite my buddy Josh out there.
Yeah.
He's got I think about $500,000 that he needs to dump, or he's going to get taxed.
Yeah.
But he goes out and tries to do it himself. I was going to do one with him too. It's like, that's what I don't get. It's like, I think you're convincing me like there's more to it than just buy it, raise the rent, paint the place, and collect the rent. It's not that easy.
I mean, it's a people game, right? You got to understand people. We have to understand what makes them tick, and you got to be empathetic to them. I think you're at a really high level, Brad, and these guys that are making $800 or $1,000 don't necessarily think the way you do, right? And I don't think that they have income growth. And so you've got to stay within a certain number. So whatever improvement we make, there's an ROI we want on it. But at the end of the day, I don't need the rent growth. I just need them to stay. If they'll stay, I'm going to make my money. I'm going to make my money.
Yeah, because when they stay, you save $3,000
You save $3,000, that turns into $50,000 evaluation.
that you get how often?
Every single time. I mean,
I know, but if it goes up $200,000, you don't just go get it, or do you get it every time?
Well, what you do is that you value your property every couple 3 months. You want to see where you're at. So the more people that renew, the more value you're going to be. The average turnover is 65%. In our company, it's around 45% or less, right? So I want to bring that down as much as I can, but at the same time, it's a balancing act. I do want them to leave if they're $200 below market.
Yeah.
Because I'm going to make a lot more money.
Gotcha. Dude, you're a smart son of a gun. I appreciate you coming in. Folks, if you guys are listening, you got to follow him at Apartment Rockstar on Instagram. You can also find him on Twitter. Look him up on Facebook. And more important, go to, is it Rockstar-Capital?
It's rockstar-capital.com. But before we go, I want to make sure that I thank my team who came with me. Natalie, who's running our cameras, Tracy Tyler, who's our VP of marketing. And I got my PR guys out there, Michael Valer and his group out there. So, man, thanks. It's been a great ride. And for those of you that listen to this show and you don't know what this studio looks like, this is a massive organization. You've got I walked out that elevator and I'm like, whoa, where am I at? So this is like Disneyland for me, man. This is a treat.
Well, dude, I appreciate it. We've been here a minute, and it's like, to me, people walk in here and they say that, and I'm thinking, what? It's just a room with some lights in it.
No,
But
he's being a little humble. You walk out of that elevator, you are here at his company. You've got, that conference room was a great presentation. You walk over here, and you've got like a third or half of your business devoted to the attention game, to branding, and this is amazing.
That's right, because that's exactly right. You got to do that. You got to turn your company almost into a media company.
It's 2020, and if you don't exist on that phone, you don't exist.
They got to know you.
They got to know you to flow you, right?
You know that's right. Man, I appreciate you coming in. Folks, as always, until next time, share this out if you don't want to hear it, or if you couldn't use it, someone can. Till next time, keep it real.